Okay, welcome back, ladies and gentlemen, to another Freedom and Wealth Seekers podcast. This is Marcel, the REI Success Maker. Super excited to be online with you all this evening. A lot going on in the real estate market, in the economy, around the country right now. Like I say all the time, I feel blessed and privileged to be on these podcasts with you all. We're a small community today, but I guarantee a year from now, 2 years from now, 5 years from now, 10 years from now, we will be tens of thousands, if not hundreds of thousands of people inside the Freedom and Wealth Seekers community. A lot in store for you all this year and beyond. I am looking forward to helping you all grow your real estate investing businesses, sharing resources with you to help you fulfill those desired results that you have set out for yourself and your families. So before we jump in, I do have to go over the disclaimer. And let me let a few more folks in tonight. All right. So again, welcome to the Freedom and Wealth Seekers podcast, where we pride ourselves on sharing, informing, educating our growing community with actionable information and content, along with resources that you can actually experience results with. Remember, folks, quick disclaimer, to do your own research and that my content is intended to be used for informational and sometimes entertainment purposes only. It is very important that you do your own due diligence before making any investment based on your own personal and financial circumstances. You should research and verify anything that I say, and also consult with a licensed professional. So tonight, we got a lot of topics to talk about. Got about 5. Before we jump in to that, let me make sure I have all the right links up. I have to shout out my son. One day he's going to watch these podcasts, and I'm enjoying raising him right now. He's 4 years old, and he seems to be, in my eyes, and even in some others, a natural athlete. So I had him out at the golf course yesterday. This is maybe his 5th time in his entire life at a golf course, and he surprised me. Now I'm here 40 years old, and sometimes I struggle getting the ball off of the tee. And I watched this kid yesterday hit over 100 balls off the tee at 4 years old. And I'm not a talent scout. I do have a little experience with golf. I grew up playing golf, and I had a golf coach twice in my life. And it took a lot of practice. But to see this 4-year-old hit this golf ball is quite surprising to me. And also his basketball endeavors. He's almost, I say, a natural at basketball too. Now maybe I'm a little biased as my kid, but I coach basketball and I know talent when I see it. But I know he's going to watch this one day. And that rolls right into one of the topics tonight: social media legacy. We're going to talk about that. We're going to talk about the evolution of rehabbing. Okay, all things evolve. We're going to talk about rehabbing houses in the hood, old versus young investors. Old versus young investors. This is an article out of Forbes that I want to share with you all that caught my attention this week. Also, the crypto watch. We haven't talked about cryptocurrency since the 12th episode. I want to rewind a bit, see what's going on in the crypto world. And that's it. So this social media legacy, like I was saying, like my son one day will watch these recordings. He'll have about 20 years. If he starts watching today, he'll have 20 years almost of recordings and content. And I shared this belief at one of my boot camps in the past. And that belief was what we put out on social media, unless we delete it, is there forever. So not saying you should live a certain way. I want you to live your life. You know, if your life is in the club popping bottles, that's what you do. Okay. If your life is in the library and that's what you share on social media, that's what you do. If your life is about walking your dog every day, that's what you do. But I told people at that boot camp, and if you've been following my podcast or if you've been part of any of my master classes online, I've shared some of my friends in the real estate business that are no longer here. Adrian Niez, who came to one of my boot camps about 10, 12 years ago. And recently he had passed away, but he, every time we talked, he talked about the conversation I had with all the students in the room that day in regards to leaving a legacy through social media. Like, we're all striving to build rental portfolios, to build our real estate businesses. Some of you have your own respected companies that you're building as well. We're all striving to build these companies and hopefully leave a legacy. However, our legacies that we leave monetarily, they can disappear in the blink of an eye. Okay, just through bad management, just through a family member, whether it's your son, daughter, grandkids, great-great-grandkids. If they don't have an interest in real estate, they'll figure out a way to liquidate those assets just to get it off their books. So, you know, historically, they say that inheritance usually lasts no more than 3 generations. Okay, no more than 3 generations. That's like historical statistics, okay? So it is all of our goals, well, a lot of our goals to create generational wealth. But one thing that I believe is here forever, and as the internet world evolves, like all things. So the internet came out, and then you had Web 1.0, I think, and Web 2.0. And now everybody's talking about this Web 3.0, which is totally uncensored and decentralized, and you own your own content. So it's not like Instagram, we put a post out. Instagram could take that post down, or could take the page down, or could just shut down Instagram, and then all of your posts are gone. You know, this Web 3.0 is going to allow you to have your own, I guess, Instagram. That's what I'm hearing, right? But back to this social media legacy, we have the opportunity to create video, to your writings, your artwork. We're able to leave this digital footprint for the people that are coming behind us. And I believe, and my belief is to leave as much of a digital footprint, whereas though my children can pass it down generations to generations. I'm not talking about 3 or 4 videos. I'm talking about potentially thousands to tens of thousands of videos. I just think about myself, like, if I could go back, I lost my parents at 12 and 15. If they had content, you know, throughout those years, I could just go back and watch it. I saw one video of my parents and they didn't speak. Okay, and there's another video floating around that I'm trying to track down, I believe, of my mom and maybe my dad. But I don't have anything else. I don't have any audio at my fingertips. I don't have any video. Okay, so we live in a world now where we really can't be forgotten. within our family structure, right? And I think it's we live in a powerful time where you can leave wisdom, okay, and legacy to the folks that are coming behind you and people that you'll never meet. Okay, just how cool is that? Just think about that for a second, and really start thinking, if you haven't been thinking about this, what you could start doing to leave a digital legacy and footprint. I tell all of my students, document your real estate journey. Okay, I don't care if you're going to look at a property, show a quick video, record something. You know, if you're dealing with a seller, ask them if you can have, if for permission to record them. You know, document all of that, because now, you know, your great grandchild or your younger sister could go back. Let's, God forbid something happened. I mean, at the end of the day, all of us have our date. Okay. Okay, all of us have our date. We're not going to be here forever, but something happens, somebody can go back and say, wow, look at what sis was doing. That just inspired me. Look at what big bro was doing. That just inspired me, right? Okay, so we have to think into the future. Okay, we have to think into the future. And you know, it doesn't have to always be about business. It could be that recipe. I had an uncle that made the best deviled eggs in the on the planet, and he passed away with that recipe. Okay, I had a grandfather that made the best pancakes, right? Now, he didn't teach me, I was too young when he passed, but he taught my uncle. My uncle knows, and guess what? We're gonna record my uncle making these pancakes that my grandfather was making during World War II on the submarines while he was in the Navy. That's where he learned how to make these pancakes, okay? That I haven't had a better pancake since the 80s. So just start thinking about what you can do, what you can leave. Even if you don't like video, heck, you can record your voice and we can put that on the internet, okay? But leaving a digital legacy, I feel as though that is very, very, very important. Somebody said I make some good pancakes. Please share the recipe. I don't know, I might share it. I don't know, I gotta see. Okay. So the evolution of rehabbing. I want to talk about rehabbing houses. I have a big event. Put this down on your calendars. May 21st. I am only opening this up to 10 people. You can register. Registration is not open yet. I'll be sending you more information on this event, but this is an event I've never done before. I've never done an event like this. It's an all-day event, and it's a hands-on rehabbing event where I'm teaching rehabbing from start to finish, from financing to contractors at one of my properties that I've recently renovated. And we'll go visit another property that's currently under construction and properties that are in the neighborhood. So that's going to be a big event. I'm only bringing on 10 new students for that event, and I'll be sharing more details. I may have a class this Saturday at 11 a.m. Covering more information and instruction on rehabbing houses, because rehabbing houses is a very risky niche. There's a lot of detail that goes into it. Every deal is going to be different. No deals are going to be the same. And you always have unexpectancies that arise. So it's very important you get educated on all of the different aspects of a residential rehab. So the evolution of a rehab, and I'm just speaking from my perspective, my experience. So the first house I renovated was in 2004. I can tell you right now that every city in the United States has different policies and procedures and protocols when it comes to people, investors renovating houses. So in 2004, the permitting process was a lot different than it is today in my market in Baltimore City. And I was not knowledgeable. Okay, I didn't take a rehabbing class. Okay, I jumped out there, and I know a few of you all that have jumped out there recently. I'm not gonna put y'all names out there. And didn't take any rehabbing classes, and y'all learned. I've got received the text messages, and some of you, I've talked to you on the phone to help you out. But you know, sometimes you gotta go through the school of hard knocks. I went there. I know a few of you that have, and it's okay. But you're still here. You're still in the game. Now, there's some people that go through the school of hard knocks and they walk away from real estate, and that's just a missed opportunity. It's really tough when you see somebody that has potential that made a mistake, because we all have flaws. Okay, we all have flaws, but the beautiful thing about life is, as long as you're breathing, okay, most of the time you get a second chance. So sometimes a third chance, a fourth, or fifth. Okay, you get the opportunity to fail forward until you get it right, right? So in '04, the rehab process, I didn't have any specialized training on it. I opted not to go to the classes. I was 20, 21, 20, no, I was 23, going on 24 when I got into my first rehab. I was 20 when I got involved in real estate, but I didn't know anything about the permit process. I thought you just hired a contractor, and the contractor will pull the permits. I didn't even know anything about permits until a housing inspector showed up at my property, okay, in Baltimore City. And he was trying to shut down my project. Now, there was a more experienced investor in the neighborhood that knew the inspector and told him, I guess my company story is some young guys in college trying to renovate a house. They've been renovating the house for a whole year. And the inspector, instead of shutting us down, this investor, I never forget this investor did us a huge favor, because we would have been shut down, and I think there was a fine involved of like $1,000. We didn't have to pay that. And the inspector allowed us to go and pull permits. And that was my first time figuring out what the permit process, or the beginning steps of pulling a permit at that property. And it was a learning experience. Now, permits, and I believe this is in most major metropolitan cities, building permits are done online, okay? You're able to pull permits online, okay? So for the folks that have never seen the building permit process, or you've never been on the portal in your city, all I want you to do is go to Google and type in residential building permits, okay, for your city. And a website will come up with a bunch of information, okay? Start reading through that information. Get familiar with the process. If you see a phone number, call the office, okay, and ask to speak to somebody, okay, who can possibly walk you through. Now, most people that pick up the phone, they're gonna direct you back to the website, because they're gonna say, we have all the information on the website, right? It's gonna be up to you. I recommend calling, getting the people down at the office familiar with who you are, your name, okay? That's a huge benefit sometimes in the long run. And I'm speaking from experience, because from that first incident in 2004, my first rehab, I started going down to the permit office. I started building relationships with the people in the permit office, not to get around anything, but to gain access to more information. They were there to serve the general public, and they educated me on certain things. Some projects I needed drawings for, some projects I did not. Some projects I needed a certain type of contractor, licensed contractor, to pull the permit. Some trades during those projects I did not. One of my consultants, who worked in the permit office for over 30 plus years in Baltimore City, I was able to build a relationship with. And when she retired, she became a consultant to not just my company, but to a lot of my student partners. So, you know, going down to your local permit office, and may not exist now because a lot of things are now digital and they don't see people in the office anymore. Um, but if you have the opportunity to go down to the permanent office, they usually have someone behind a kiosk, giving out general information. They usually have stations with computers for the general public to use to pull permits. That's what a lot of contractors do. They go actually down to the permanent office and they put everything in there. A lot of old school contractors, but that's like the first phase of of a rehab is getting the permits. Now there's of course acquisition, and then of course acquisition you have funding, and that one can come before the other. Acquisition, you're finding if the deal makes sense, usually the money follows, but it's always great to have the money ready. Okay. Now I sent out a text today saying saying, hey, I haven't heard from you all. What's going on? And I got an abundance of responses. And I tried to respond to everybody at some point today. But this Saturday at 11 a.m., I'm going to have a class and I'm going to dive deep into a lot of the questions that you had. Okay. In regards to funding, in regards to private money, in regards to hard money. Some of you got sent some really detailed questions as far as different types of repairs. So I'm gonna put together a lesson from scratch, going through different phases of the rehab and answering a lot of your questions this Saturday at 11. You should start getting some text messages and emails about that class tomorrow and Friday and Saturday morning. So it's going to be info packed, and I hope to see you there. Now, let's look at this article. Okay, let's look at this article, and then I want to talk about rehabbing houses in the hood because I saw some comments come in via text that I want to talk about. But I'm going to share my screen and go to this Forbes article. And I'm also going to send the link to this article so you all can read it. All right. So this caught my eye, how investor age can impact real estate investing decisions. Now, if you have been a Freedom and Wealth Seeker since episode number 1, then you know how we read our articles and we look at news stories. We don't just look at them for information purposes. We look at them also for opportunity. So let's read through this, some of this article to see if we can identify any opportunities. So how investor age can impact real estate investing decisions. All right. So Edward Fernandez founded 1031 Crowdfunding in 2014 and has more than 20 years of experience in sales, real estate, and investments. So I believe this is the person that wrote this article. He says investors who are interested in real estate can choose among different asset types that each offer potential pros and cons. As the founder of a real estate investment platform, I've noticed that the relative appeal of these options often depends on the age of the investor. Older real estate investors tend to have a longer tenure in the industry, so their investment decisions can be strongly influenced by previous cycles. I definitely agree with that. Younger investors are often more aggressive, partly due to their relative lack of experience with these cycles. Wow, this hit it right on the head. Now, I consider myself still a young investor. I'm holding on. But I bump into some of these young guys and they call me OG. So I'm like, oh, I must be an old head now, right? But this article speaks to me because when I was in my 20s, I was very aggressive. I was unrealistically aggressive, meaning by the time I was 29, I already had over $1 million in hard money debt, okay, which was very risky. And it was due to my lack of experience with cycles. So I had never cycled through a marketplace. Okay, meaning when I got into real estate was moving up like this. It wasn't going down. So I ended up going through that downturn cycle. Okay. And now that I'm a bit older, I actually invest with a more of a conscious, okay, instead of investing with no conscious. So I really can relate to that. And it goes into assessing options. This is most likely more platform driven. There was a platform that I shared on the last podcast. Hopefully, a lot of you were able to look into it. But this is someone that has a fund uh, platform, and he probably has conservative and some aggressive investment options. I'm not saying to anybody here to go in and invest in some type of platform where you can get a return, but I am saying do your own due diligence. Make yourself aware. But as I look through this article, it talks about multifamily, it talks about triple net lease properties, it talks about cash flowing properties. And I'll tell you, most of my clients that are older, well, and even when I was in my 20s and I was selling properties to investors that were maybe 50 plus or in their late 40s, their main goal was building a rental portfolio. Okay. That was their main goal, each and every one of them. Very few were looking to flip a house. Most of the house flippers were in their 30s, early 40s. And that was my market. When I was wholesaling a ton of properties, that was my market. Now, I'm the person that's looking to buy a wholesale deal. I'm the person that's looking to buy and fix up a house and rent it out for a number of years and ride the wave of appreciation. But I still like the wholesale too. Okay. And I'm also the person that wants to invest longer term in tax sale certificates or tax deeds. So, your journey is going to shift at some point. A lot of people like to start off wholesaling, and that's quick cash strategies. However, there's no longevity in it if you don't build a business. Okay. And even when you build a business, you got to show up, or your team has to show up. Okay. When you're buying assets to actually generate some type of cash flow every month, that's buying a property once, maybe fixing it up if you have to, placing a tenant there, and then managing that property. And that property is going to pay you every single month. All right. So this is an article that I want to share in the group. I definitely want you to read it, and I want you to identify any opportunities that you see in your market that you can potentially take advantage of. Even if there's what's going to happen when you read this article, some light bulbs may go off. Okay. So one of the things that stood out in the first sentence was the operator focused on 1031 crowdfunding. So when I saw that, I was thinking self-directed IRA. Okay. I was thinking about 1031 exchange. Okay. And I was thinking who usually operates with those types of products. Okay. Title companies. So that's as soon as I saw that first line, I thought about title companies. So all the title companies that I've done business with, they have done closings where they've either done a 1031 exchange or someone has used a self-directed IRA. Okay. And those people that usually are using those are trying to avoid paying a high amount of income tax. And they're also looking to build up their retirement. Okay. So those are the types of clients that I know are buying properties long term. Just from that, now that's from my experience in the business. I would know to see an opportunity like that, but I just gave you all the nugget. Okay, some of you have had closings. Some of you are already building relationships with title companies. Title companies want more business. So if I'm a wholesaler, okay, and this is going to go into some of the questions. I don't want to get ahead of Saturday, but I'm going to drop another nugget. Okay, if I'm a wholesaler, I want to reach out to my title companies to find out who are the investors that are closing with self-directed IRAs or doing a lot of 1031 exchanges, because they're active. Okay, and they're not in the business for a quick buck. They're most likely more long-term investors. Okay, then if I'm a rehabber, somebody sent me, I got a lot of texts today about funding. Okay, if someone's closing with a self-directed IRA, that means they have money to invest. When someone invests money out of their self-directed IRA, and that money they invest yields a profit, well, guess what? They're not looking 9 times out of 10 to live off of the profit from the money that they invest out of their self-directed IRA. They're looking to not pay any income tax on that profit. So that's one of the rules and one of the benefits of investing out of your self-directed IRA is that when you invest X amount of dollars and it yields a profit, that goes back in the self-directed IRA untaxed. Okay, and after a certain age, it is totally tax-free. I think it's 59 and a half. And we'll be talking more about self-directed IRAs this year. So make sure you write that down, start doing your research, and really sink your teeth into this article. Definitely want to talk about, we're right on time here. Definitely want to talk about the ebook. A lot of folks have been asking, how do they get the ebook? And I say, all you got to do is read the directions under one of the videos. I appreciate the support, folks. My goal over the next 30 to 60 days is to get to 3,000 subscribers. This is the REI Inner Circle YouTube channel. This is where we store the podcast. If you're interested in the book, all you have to do is click one of the videos on the homepage, go down to the description here, show more, and just follow the steps here. Step 1 to step 5, like the video, share the video, and comment on the video. This video has 6 comments so far. Once you've done all that, take a screenshot, send me a text message at this phone number here, and then I will ask you for your email, and I will personally send you my first e-manual, a bonus ebook, and a training site with training videos and audio, all for free. Has a value of over $1,997. I sold those courses for upwards of $2,000 starting in 2010. And I'm giving away today for free. Now, some of the websites in the manual are out of date, but the concepts still work today. Okay, the concepts still work today. If you already received the e-manual and you started reading it, or you've completed reading it, let me know in the chat what you thought about the e-manual. Was it good? Did you find value in it? Let me know if you watched any of the videos. Okay, I want to talk about something that we did not talk about since episode 12. Okay, and that's cryptocurrency. So on episode 12, okay, we talked about Bitcoin. Okay, and Bitcoin's price during episode 12 was $41,146.76. Okay, today, Bitcoin is $41,315.72. So it's up, but Bitcoin lately has been down. Bitcoin, since we last talked, was up, I think, 50-some thousand at one point. I think like 52. So it went up, I believe, almost almost 10,000, or maybe it was 47. Okay, but I know it was up a lot higher than 41,000, but it started dipping down, and it was down to like, I believe, 37 or 39,000. Ethereum, however, when we talked in the episode 12, it was $2,770.90. Today it's $3,126.29. Now that's a big increase since episode 12. And I just want to keep my eye on this. And I recommend that you all do the same. Some of our student partners are investing heavily in cryptocurrency. This is definitely a new asset class. Cryptocurrency is only, I think, 13 years old. It's a fairly new asset class, and I believe it's here to stay. It acts a lot like, well, Bitcoin to me acts a lot like real estate in regards to its appreciation. I've watched Bitcoin go from a penny to where it is today. I wish I would have got involved in 2009 when I first started getting emails about it, in 2010. But we live and we learn. But this is the Crypto Watch for this episode. I'm going to try to stay on top of tracking Bitcoin on each episode. Let's just see the growth. We got 52 episodes this year. Let's continue to see the growth in this new asset class that's emerging. I believe investing in stocks, real estate, and cryptocurrency is a must. That's my personal belief. And I hope that you share the same ideology one day. Direct Mail Wednesday. We cannot end a podcast without talking about direct mail. So I want to jump into a letter that I received from Pensacola, Florida. April the 2nd, they sent this out. Okay. They sent this out. And this is the letter. And this is a new form. Okay. This is a new letter that I received. I've never received a letter from this investor. And it's a pretty good letter. I like it. And if you own any properties, I recommend that you start collecting direct mail pieces. Okay. And if you don't own any properties and you start dealing with potential motivated sellers and they say, well, I got a whole stack of letters here from investors that I've been collecting over the last 3 years, I want you to ask the question. I want you to ask the question, would you consider giving those letters to me or letting me borrow those letters for future reference? You'll be surprised how many sellers will give you, especially when you get the contract, will give you all of the direct mail that they've been collecting over the years. That's like a treasure trove of free marketing ideas. I'm gonna show you a few ideas I get from this letter. I'm not gonna go in great detail tonight, but I am gonna go in great detail on Saturday regarding this mail piece. And also I'll touch on it on next Wednesday. So the headline says, do you want to sell your home at maximum value? Huge benefit to start off, right? The other thing that stands out is that he shares his full name and phone number, Benjamin Morgan. He also shares a website, but then he shares this QR code, okay? So this tells me a couple of things. Either he's really done his research on his list, meaning the age demographic, okay? Now, would I send a letter out to somebody that's in their 70s with a QR code, this weird symbol? They're not gonna, most of them, those folks aren't gonna understand what this is. It's like a weird symbol. May scare them away. I'm willing to bet that Benjamin Morgan knows how old I am and knows that I'm a millennial and I'm probably familiar with QR code. It came out while I was in college in the early 2000s. Okay. I had no idea what it was then, but I do now. And if I scan my phone, I'm willing to bet that it takes me to some type of website. Okay. So this is a plain black and white letter with a QR code. And I thought it was really unique. The envelope, I just opened this today. Okay. I had it for about a week. The envelope did not entice me to open it. Okay. It looked like junk mail, and I knew it was direct mail, probably for one of my properties. And I said, I'm going to share this on Wednesday night. So this is an entertaining letter, to say the least. And I want to share more about this letter on the class, during the class on Saturday. But Direct Mail Wednesday, QR code. That's the new thing. I've never seen a QR code in a direct mail piece until today. Okay, just like you. So folks, we're gonna end here. Episode 16 is in the books. I hope you all were able to grab some nuggets from tonight's episode, and I look forward to seeing you all at the closing table very, very soon. More to come, folks. Saturday, 11 a.m. Clear your schedule. We're going to jump into rehabbing houses, and I'm going to share an opportunity for you to possibly work with me on a full day training in Baltimore, Saturday, May the 21st. Going to be an info-packed event. I'm only taking 10 new students for that training, and it's going to be totally hands-on, folks. Take care, good night, and I'll see you soon. Bye-bye.